Hey traders, welcome to the double shot. It is the 2nd of May. Just a video today. Let's take a look at what happened in the markets. Um, you can see in here, yesterday was the Fed day, right? And the markets went up during the conference and then they sold lower. It was a very quick reversal, but there was no follow through in the futures overnight or even today, right? We just retested those lows at about 5,000 and then we quickly pushed back, creating this small hammer on the daily charts. So we will be watching, the volume today was fine, but it was not, as high as I would have liked it to say that there is, some decent moves coming from this move. But the fact that you continue to hold this important psychological 5,000 level is important. You can see, I mean, if you ignore this little drop, right, and you look at the days previous that drop into 49.50, you can almost say that the real level, it is 5,000. Everything below that was a failed move, and that's kind of where our focus is, to see kind of how you close the week. So we'll watch this into tomorrow. Apple just came over with earnings, in the after hours, and I don't think that their earnings were, super outstanding or anything like that. But the fact that they bought back stock, they had a major buyback. I think one of the largest in the company's history. It created this kind of large move from 172 to near 186 and a half. So pretty strong move. It should bode well going into tomorrow. Now tomorrow we have the job report, right, at 7:30 my time, 8:30 Eastern, and I think they're expecting about 20,000 jobs. So we'll see what happens there with that, and if there's going to be significant enough in terms of maybe participation rates and unemployment rate and all of that to trigger any significant moves from the market by connecting that with the Fed cycles, hiking versus cutting. We'll see. So, pretty good reaction out of all the markets today. The S&P 500 again with this little bit of a hammer on the daily time frame. You can see the volume; it's slightly above average, which is good. Still below the previous few days of volume, and we're still below the 20 and the 50-day moving average, which do have a crossover. So we're watching for that. I think, if we're not getting the signal tomorrow, we'll see if they buy the market, or maybe at the latest Monday we'll find out. But that's what we want to see, a break through these moving averages on high volume, and I think that's going to give us a bit more of a green light to see if we can start to initiate positions on the long side. On the short side, again, until the low of this candle right here, as I said many times, get taken out, and right now you can see that 5,000 is pretty established. There is no reason to press that side either too much. So it's in a bit of a holding pattern. I'm going to go through all these markets just to kind of give you my thoughts on that. The equal weight was fine. It was about 60 basis points today. No real read necessary on here, anything more spectacular than what I've talked in the S&P. So we watch this for any type of divergence, between the equal weighted stocks and the cap weighted. Nasdaq, had a pretty good day, 1.3%. It pushed up much higher in the after hours with the Apple news. So you can kind of clearly see the levels in here. There's no reason to go over it too much, but we want to see this jump back and get back above that 50-day, and that would be again, just like in the S&P, a signal that things are improving. And this could have been just a simple correction, whatever it was, 6-7%, and we're ready to continue. But nothing, nothing yet. I mean, I'm watching a bunch of stocks. As I've said, I've been doing some purchases too, small. Will add on a lot more confirmation from the overall markets. But there's plenty of stocks that are having decent breakouts, and it doesn't look necessarily like like a sick market in any way. So this correction might have been it. You can look at the blue chip growth, right? So this is kind of the larger companies in here, the bigger ones. They're just holding just underneath that 50-day, right? And it's almost like it's just a matter of time before we kind of try to get back above there. If this was a three-wave move, guys, we should have fallen back and taken the lows of this candle 36 and continue to push lower. That's kind of how we're reading price in terms of corrections. If they don't, right, that means that something else it's happening. I thought I heard something. Sorry about that. All right, that means that something else is happening. So we'll see. But this looks pretty good. Look at the volume kind of coming in. We're starting to cross over on the PPO. So I'm looking from these leaders in the blue chip growth to see if they can, show us if they can show us the way. It's too late for coffee right now, so I'm just having a little tea. So let's go and take a look at the equal weighted, QQQ. This looks good. You can see that it's not, as strong as the blue chip growth, even not even as strong as the Nasdaq, but it's trying. So I'll leave it at that. I mean, look at the volume. There could be something there. Take a look at IWM. This one had a strong move, almost 2% on the day, which is what you want to see. So again, if this was an ABC move, this whole thing right here, right, that means that we should have broken below these levels and start to head lower. And that was that would have been the clue for the market breaking down and getting into a worse territory here. But the fact that you held that 195 and you're back at 200, kind of raises the prospects of further breakouts now. So yesterday's move, it was in a pretty high volume, and they leave it as a dark candle since it closed bullish on IWM, so above average. Today's volume was not as high I would have liked it to be, but we'll see what happens tomorrow. And then if you get back above there, above 201, I think you got to start to nibble at this market again. And if one wants to use a triple leverage, I don't suggest that just for smaller periods of time. I think that's TNA and IWM. Otherwise, just simple basic IWM. Let's see here. Nasdaq Composite looking pretty good also with a with a nice hammer, just like a Nasdaq 100. It's still got a bit more to go. Dow Jones holding amazingly this level right here, right? And again, 37,700. Plenty of demand right there, right? They did not let this market break lower at all, not even a fake break, slightly here, but now with the close. So now we're looking on the other side and see if we can break out of this range to the upside. And I'm watching the Dow just for further confirmation. You can see the RSI, it's sitting nicely below 50, right? Which means that the market is still contained, in this kind of between bearish and bullish stance, but eventually what will break out. Look at the PPO just overlapping and just doing nothing right there. So a lot of consolidation there. OEX, the top 100, coming back slightly. Still got to fight that overhead supply. Transports, they had an attempt to break out and they corrected lower. They're still struggling. There was a bunch of sells in these sector. A lot of stocks, did pretty heavy selling. So it's a little bit beaten down and trying to recover. We always watch them for some kind of a confirmation with the health of the market, but they're just being range bound pretty much. So not a lot to read there. Semiconductors, had an attempt to move, and in my view, if this was an ABC down and this is the first move up, let's label that as a wave one, then this must be a wave two. So the way we kind of think about it is, okay, if it's a wave two, you either buy it here, right, into the 61.8 of this first advance, which stops below these levels, right, which is still a little bit risky with non-confirmation of a break above the B wave high, right, which is kind of what we want to see. So that's the first level to watch in terms of buying semiconductors. The other one is, and that's kind of how you start to nibble at it, is this trend line. So there's three ways of kind of doing this, right? You either buy here, on a little bit of buying confirmation, right? That exposes you to a bit more risk that you have no confirmation yet. But you got to have your stops below these levels. And if you wait for that, then if you don't do that, then you wait for the break of this trend line right there, right? And then you start to initiate with small positions, and then you break further up above this line. Now you got a lot more confirmation. Now the market is trending higher. Now now you're looking and say, well, it looks like we're getting confirmation, so let's just kind of step it up a little bit, and then maybe you add a final positions once you break back above those highs, and that's how you can kind of protect a little bit and just say, if this doesn't work out, then I'll get stopped out, and if this, you buy up here slightly, or just a small position, let's say a quarter of a position or whatever, and then the market reverses, right? Then you have the stops below this low, and you're losing a little bit. So it's a trial and error, but this is how you kind of step in, you pull back, you step in, you pull back, after this ABC correction. So very interesting what's happening with the semiconductors. I'm going to watch it carefully. Growth reserve, skip that. Bitcoin, again, it had just very brief breakdown below that 60K. It seems that we're coming back today slightly. We have a crossover of the moving averages. They're starting to point lower, the 50. So clearly we're not out of the woods by a big stretch. But today's reaction was good. If we can get some confirmation over the next couple of days that the buyers are serious, that we're getting back above 60, right, that this little drop was just a shakeout of the long positions, that could mean that we're ready to go, and one could start thinking about the upside once again. I would watch that trend line, which curiously enough comes at the same levels as the moving averages, more or less. And then if we want to see something like that, that would be just a nice kind of a setup for a continuation higher. So I like what I'm seeing here from the 150. A little bit of buying today, but again, nothing extravagant. So we'll just monitor that until we're seeing a bit more. But it starts to look decent. You can see that Ethereum actually hit the 150-day right there. It created a bit of a hammer. It needs to show us a little bit more work as well. I think we made a low below this low by what I'm seeing at about 2,800. So, not out of the woods by a long stretch. The level to watch, it is disappear, and then also this trend line, which you could play with it a little bit by looking at that quick swing as being a fake out, failed breakout, and if you start to see the market acting well, and getting buys above that level, then that could pique the interest of the bulls further, and we could see a bit more. Look at the RSI getting rejected between 50 and 60 in this correction, so that needs to get reestablished a little bit more. So Ethereum, it's right there. From a longer term perspective, buying here, you're definitely getting, I would say, a lot more value than buying up at 4,100. Now you're more in line with the average prices over the past 150 days. And, for those that don't necessarily care what Ethereum does in the next 3 weeks, if you're looking further down the road, this could be a decent place to add or to start building longer positions, without necessarily getting freaked out if the market fails. I mean, if it fails, you're risking very little, and you can get out on, I don't even, maybe on a couple of weekly closes below these levels. Let's say that the market changes structure, but it's not like you're looking for any type of a collapse right here in Ethereum. I think these levels around here should hold. So that's that. And then TLT trying to come back on a little bit of a higher volume. You can see that the yields are dropping down on the 10-year. We're at about 4.57 from a 0.475. Right at the 20-day moving average. We're looking for this to continue to drift lower after a small fake breakout. That kind of, you remember, people were freaking out right here saying, oh my goodness, the rates are going higher. You have inflation going higher. You're going to have lack of growth. So what's going on? And that's the moment we kind of pull back. So not much here just yet, but there's a trend line that one could watch. Something like that. I'm pretty sure that these lines are almost parallel. So we're at the you know, top part of this range of this kind of ascending move, and we'll watch for kind of what happens here when it gets to the middle. But the moving averages are trending, so they gotta take that back down. If to kind of provide the market with a bit more liquidity, I think. The dollar pulls back, so we had a little bit of an attempt to move. We talked about the 107 being resistance, coming back below 105. I think it's interesting. And my mind goes again to what if this was it, and you had your A, B, and then your C wave, and it's almost equal. You're almost done, and you're looking for downside. So watch this trend line right there. Right, this is a pretty nice channel. Breaking below here, I think could again, when you have ABCs to the downside, you look for that B wave. When you have ABCs to the upside, you look for the B wave to get taken down. Now, there's a lot to do until that happens. This is just a small move. So, but that's just a roadmap on the dollar. Commodities have been coming back, so not much right there. Gold, still holding at 20. It's still in a pretty good bullish trend. I think the market is just kind of trying to reset, trying to correct a little bit of this move. If the dollar starts turning, if the yields are coming lower, you could see gold maybe drifting a bit lower into this 50-day moving average, and then once this correction is over, I would definitely watch for some of these levels to be taken out, and then either open fresh positions or add to existing ones. But taking a little bit of profits here after this move is not a bad idea. But the trend remains pretty much intact in my view. You have an RSI that's holding at 50, and these are usually good levels to try to get involved. But it might not be time just yet. We'll see. You want to see some more serious buying coming in on volume and all of that. So maybe gold still needs to rest a little bit. Same for silver, which came a bit lower to the 50-day moving average right here. And if you're looking at this as a 1, 2, 3, 4, and 5, right, that means that we're in the middle of a correction, which eventually should resume, to the upside once this completes. So watch the 50, watch the volume. Silver looks interesting, I think, from a longer term perspective. So I kind of like it, and I'm trying to find ways to maybe participate in this. Copper, sold off a little bit in here, but still pretty good uptrend. And WTIC failed. It failed above 86. It pulled back, hold the 50 for a little while, and then comes back at the 150-day moving average. So it's in a big range. I don't think there's much to do here. Let me see. Just a little bit of a trend line right there. I guess. I mean, is this some kind of an ABC? It's possibly just watch 84. If you're going back above 84 from here, then yeah, maybe playing back to the long side could be something to do. Right now, again, you're coming into a big demand, but I haven't been a fan of oil for a while, and I'm not, too interested in doing anything with it. And then the last one here, it's a volatility, which you remember when we sold off, right? It went up to 21.5 into the VIX, and then they brought it back. They collapsed volatility right here. So it's trading 1468. We're back, in a relatively good area for risk, and without a lot of fear right there. Now that we got a bunch of the stuff out of the way, most of the very big earnings are out. The Fed is out of the picture. Tomorrow we'll get the jobs report, and then the markets will trade on, just on the flows, I guess. And the month of May comes here, so it should be pretty interesting. So in conclusion, we'll just watch for those confirmations from the daily activity on the indexes, with volume and moves ideally above 1%, and then we can take it from there. So I'm invested, but lightly, and I want to get a bit more confirmation from the market to start to press the gas pedal. So we'll watch that, and I'll be here for any questions. I will see you, I think, on Saturday for the weekly report. And as always, I appreciate you. Thanks for watching. Talk to you later. Bye bye.